Are you ready for the biggest financial storm of the century? Brace yourselves because experts predict that the year 2023 will bring a global economic crash that will shake the world to its core. But don't panic just yet. In this video, we'll show you how to prepare for the imminent crisis and come out on top. So grab a pen and paper, sit back, and get ready to learn why 2023 will be the year of the global economic crash and how to weather the storm. This may sound terrible, but a recession, which is an economic crisis, is inevitable and even necessary. The question is, why? Well, this video is all about that. Today we will see why 2023 will be the year of a global economic crash. Why is it necessary for this to happen? We will also explore what led us to this point, and most importantly, what can we do individually to protect and prepare ourselves for a crisis of this magnitude? Let's begin by discussing how this whole thing started. The 2008 crisis caused significant damage around the world, especially in the US and Europe. To recover from it, central banks lowered interest rates to near zero and even below zero. This means that borrowers are able to get access to loans at very low or even no cost. Central banks believed that by providing almost zero-interest cash to businesses and individuals, they would be able to generate more investments and consumption, thereby kickstarting the economic recovery. To achieve this, the banks printed money and distributed it to citizens, as well as companies. This aimed at encouraging spending, which could revive the economy. Industries such as construction, tourism, and large technology companies have benefited from this. In fact, consumers, people like you and me, finally had money to spend again. Isn't that fantastic? Companies have also been able to invest in new machinery, build new factories, spend more money on marketing, and hire more staff. This money boom caused many companies' stock prices to skyrocket, and suddenly everyone wanted to invest in large technology companies such as Google, Facebook, or Apple. While other investors with a desire to take risks opted for business models such as Tesla, which in 2018 still did not yield profits. Others directly speculated on assets or businesses with no backing, such as many cryptocurrencies. The central banks began to notice the situation. The world economy was getting out of hand due to excessive printing of money, and prices were beginning to rise alarmingly. Something had to be done to stop the economy from overheating. What do you think the banks did to address the situation? Subscribe to the channel. With the U.S. Federal Reserve and the European Central Bank at the helm, the central banks began to raise interest rates so that things would not spiral out of control. Raising interest rates is a wise choice when the economy is overheated, since people or companies have to pay a higher interest for their loans or mortgages. The perfect strategy for banks. Why? Since it is very possible that one should think more than twice before asking for a loan, and if people do not ask for a loan, the economy will slow down as there will be less investment in new factories, houses, or cars. As the types of jobs available were gradually increasing, the economy seemed to be in full shape, but without being excessively overheated. However, March 2020 arrived and everything was about to get out of hand. However, a few days before the pandemic that took over the planet and almost paralyzed the economies of the entire world. That's when the problems began. Suddenly, only companies with essential services for the country's functioning were allowed to operate. Tourism came to a halt, the hotel industry closed, and millions of businesses suffered the consequences in one way or another. Looking at the situation, governments and central banks had to act, or else a humanitarian catastrophe would have been served. This time, their mission was to keep the world economy afloat, even if it was artificial, until the situation was solved. You may be asking yourself, how did they do this? Very easy. Returning to flood the economy with money, as it had happened in 2008. The governments responded to the crisis by announcing large public spending programs. For example, the European Union announced the Next Generation Funds, an investment of 750 billion euros to address the consequences of the pandemic. The United States also launched a $550 billion infrastructure plan, but of course, this money had to be taken from somewhere and managed very carefully. Furthermore, the economy needed people to continue consuming and companies to invest, despite the fact that people were at home and many sectors of the economy had stopped. People continued to consume, and companies invested. This was only achievable by printing money with very low interest rates, so low that they could even be negative. Initially, this strategy worked well for both central banks and governments. The economies, badly damaged by the pandemic, managed to recover in record time, and the markets recovered quickly. The markets showed remarkable recovery in a short space of time since the pandemic began, thanks to huge economic stimulus packages that were pumped into an already overheating economy. Although it seemed beneficial at first, the consequences of this are being felt today, and we still have yet to see the full ramifications in future. Therefore, experts predict that the year 2023 will bring a global economic crash, which will make the situation much worse. Since the overprinting of dollars and euros during the COVID left us with a hangover in the form of inflation. Let me explain what I mean by inflation hangover. We can clearly see the results of inflation in the form of price increases, but this was not the only reason why prices were going to rise. We are about to witness the perfect storm. Yes, there is more to learn about this whole situation, since we have already seen the expansionary monetary policies, such as the decline in interest rates and the printing of money, as one of the reasons why prices went up. Now, we are going to examine the two major reasons why experts strongly believe that 2023 will bring a global economic crash. There have been delays and inefficiencies in our production chains, and this consequently allowed China to take advantage in the market. Let me explain this. During the COVID crisis, many industries had to stop production, such as mines that closed due to workers getting sick, or the authorities of those countries not authorizing miners to go to their jobs. Of course, this caused a great shortage of strategic minerals. Due to lockdowns and closures, many Chinese ports were blocked, resulting in a similar situation. There were also a series of droughts and floods that caused global food shortages. The issue with shortages is that prices tend to increase. We can understand this concept better by using an example of a mineral which is becoming scarce in global markets: silicon. The price of fertilizers also went up, causing some food prices to increase as well. When the price of silicon became more expensive than usual, the prices of Windows and other products that use silicone also increased. The cost of microchips have also gone up as silicon, which is a key component in their manufacturing, has become more expensive. The cost of microchips had gone up, resulting in all electronics becoming more expensive and triggering a retail frenzy. It appeared that the inflation caused by the price rise was unavoidable and wouldn't improve anytime soon. Now, the third reason we must take into account as to why 2023 will be the year of a global economic crisis and why prices have risen is the conflict between Ukraine and Russia after Russia's invasion of Ukraine. Western countries imposed various sanctions on Russia in order to scare them. As a result of these sanctions, Russia faced serious difficulties in exporting oil and natural gas. Now the problem is that the West was one of Russia's largest customers for the purchase of oil and natural gas, and overnight, gas and oil became scarce in the international market. Therefore, energy prices have been increasing rapidly, causing even more inflation since all transportation has become more expensive and all industries that require energy for their production processes have to produce at a higher cost. In addition, a significant percentage of the cereals consumed worldwide come from the fertile lands of Ukraine, thus creating the perfect storm and causing inflation to shoot above 9% in the U.S. By the beginning of summer 2022, inflation had reached a tremendous peak, with more than 10% in the Eurozone, or in other words, inflation had not been this high in 40 years. The governments and central banks had to do something, so as the conflict between Russia and Ukraine was not going to end, the countries importing energy, such as those of the European Union, began to look for alternatives to Russian gas and oil. They have tried to reduce their energy consumption by enhancing renewables and even stopping the price of the Russian barrel. Even the winter of 2022 in Europe has seen unusually high temperatures, which has not been bad, and has only improved inflation data related to energy. Additionally, both the European Union and the United States have initiated plans to ensure the supply of some strategic components. However, this is insufficient, and the biggest problem that has caused a large part of inflation. Is that large injection of money, as a result of the COVID pandemic, the only option for central banks? They have made some of the most aggressive interest rates in modern history, so if you are going to buy a flat in Spain, you should consider this. At the beginning of 2023, the mortgage interest had tripled compared to the beginning of 2022, and in the United States, this increase was even greater, as the official interest rates went from 0% to 4.5% in a few months. And now you're surely asking yourself if the magic formula of raising interest rates has worked well. Yes and no. It is true that the expected economic growth has been reduced slightly, and even large companies such as Alphabet, Google, and Amazon have had to make their first massive layoffs. It is true that inflation has already hit the top and is gradually descending, but it is still at very high levels. Over the past few months, those who had lost their jobs due to the pandemic have been able to secure employment again, resulting in a dramatic drop in the unemployment rate, one of the lowest levels recorded this millennium. This means that people continue to have money to spend. The recession has yet to arrive, so the economy must be slowed down further to reduce inflation. To do this, we've seen an economy slow down by raising interest rates. Consequently, there is a curious paradox. To prevent inflation from getting out of control, the economy needs to slow down slightly. The problem is that the later they slow it down, the more impact it will have. The longer they take to slow it down, the greater the risk of a major crisis. Consequently, the present positive employment figures are not good news, as it forces the central bank to take a more restrictive approach, thus increasing the probability of a downturn in the economy. Central banks are in charge of ensuring that the economy is kept in balance by adjusting interest rates. Currently, developed economies require a short recession to slow down inflation and get the economic growth going again at a faster pace. Today, there is no doubt that 2023 will be the year of a global economic crash. The economic crash is definitely going to happen in 2023, so how and what can you do to prepare for it? The first thing is to control expenses and avoid going overboard with whims and scams. Interest rates should also be taken into consideration. Right now, interest rates are very high, and they are expected to remain high until the beginning of 2024, so it is not the best time to mortgage. However, the good thing about recessions is that they provide great long-term investment opportunities. Remember that all this content is formative. What I tell you are examples and, in no case, should be taken as investment recommendations. Before investing in stocks, you have to do your own analysis properly. As I said, if your idea is to invest for the long term, it could be interesting to look at quality companies that provide benefits, have great competitive advantages, and have attractive prices. Companies such as Alphabet, Nike, or PayPal have suffered great corrections. Without their competitive advantages being compromised and no debt, it is important to have many of these great companies on the radar and monitor if the market offers them an attractive price at any given moment. However, if we want to take advantage of the recession, then we have to ask ourselves what type of company benefits from a recession. In this case, we have to look at so-called defensive companies, since a defensive approach can benefit the most. We refer to defensive companies as those who do not suffer in crises or even benefit from them. This is common sense, as we can see how different companies have behaved in previous crises. Now, if you want to know how to invest this year, I recommend you watch this video next. Do not hesitate to share this video with people you know who want to know what is happening in the economic world. Subscribe to the channel and share your thoughts on today's video. Thanks for watching, and I'll see you in my next one.